Reserve Bank of India is celebrating its 90th anniversary today. The RBI has been instrumental in shaping India's financial system, from managing inflation and fostering economic growth to promoting financial inclusion and technological innovation. It played a major role in India's transformation from a least developed country to a global economic powerhouse. Dr. Charan Singh, the founder and CEO of EGROW Foundation, is answering a few questions about the RBI's evolution as one of the most respected central banks in the world and its impact on Indian banking system. Dr. Singh has a long association with the Reserve Bank of India. He joined the RBI in 1984 as a research officer and went on to become the research director in the Departments of Economic Policy and Debt Management. He was also the RBI Chair Professor of Economics at the Indian Institute of Management, Bangalore. He has also served as Senior Economist at the IMF. A renowned expert in fiscal policy, monetary policy, financial markets, and international trade, Dr. Singh has published extensively and has two major academic works to his credit. He is also a popular commentator for leading newspapers and TV channels. He answered some questions about the RBI's remarkable journey. RBI has come a long way since it came into existence in 1935. How has its monetary policy framework evolved over the years?
Thank you for doing this interview. I have been with the Reserve Bank since 1984. And as you know, it has been in existence since 1935. It's 90th year. Having worked in the Reserve Bank and been watching it since 1984, I can tell you it is one of the best institutions that our country has. What makes it the best? How has it evolved over the years? That obviously is a very important question. And I also would like to share with you that the Reserve Bank's officers, they're trained with the best of the best in the world. And given that training and given the DNA of an Indian, they obviously turn out to be very, very good regulators, supervisors, as well as analysts of the macroeconomic situation of the country. That is why the monetary policy that is framed in the Reserve Bank has stood the test of time. I do not want to share too much of personal information, but I would like to share something very important with you. In 2004, I was doing my postdoctorate studies at Stanford, and you will be surprised. At Stanford, we had the Fed Reserve San Francisco with Janet Yellen as its president. She was to visit India. And in one of our interactions, she wanted to know how does the Reserve Bank conduct its monetary policy as well as its regulatory and supervisory functions. So I had the opportunity to explain to her, and she was very impressed. It is in 2009 or 10, when I was already working at the International Monetary Fund in Washington, I realized that officers from the Reserve Bank of India are there in the Fed Reserve to train the officials of Fed Reserve on how to conduct regulatory and supervisory functions which are more effective. You would remember in 2008, there was a major economic mishap that had happened in the US, which impacted everybody, the global financial crisis. So the Reserve Bank's evolution as one of the most prominent and respected regulatory and supervisory authority in the world is very well established now. And I think that comes from its training of its. It also comes from the legacy that it has. And please always remember the financial sector canvas in our country is very, very different from the rest of the world. We have commercial banks, some in public sector, some in private sector, some from foreign countries. All of them are here. And between the private sector banks also, some are new, some are old. Their functioning is very different. Then we have cooperative banks, which are more than 100 years. Then we have the non-banking finance companies. So if you look at the plethora of institutions regulates and conducts its regulatory supervisory function and operates its monetary policy, it is just an Herculean task. And this work has been done so effectively over the years, I would say over the decades, that globally the Reserve Bank of India is respected. It has earned its name, I would once again reiterate, from training of its officers and I would say, the Indian DNA in its officers, which brings that hard work, that dint of honesty, which then makes it very successful.
There have been times when the RBI has struggled to meet its inflation targets. What are the challenges it faced in controlling inflation?
Inflation is a very difficult thing to mention. The economists, I would say, as a tribe, have failed the world. All these years, the monetary policy was working on the premise that inflation is a function of money supply. And there's a famous Cambridge equation, which is generally used. Inflation everywhere is a monetary phenomenon. Actually, a famous economist, Milton Friedman, was always attributed as a monetarist because inflation was always a monetary phenomenon. As the world evolved, trade started happening, and most importantly, in recent years, everybody realized it could be a supply side phenomenon too, other than a monetary policy. Now, if there are disruptive supply chains, as happened during COVID, or is happening during the recent period when there has been a war in Europe after many, many decades, there is supply side disruption. When there is a supply side disruption, again prices tend to rise and that becomes inflationary. Therefore, it's not always demand management, which was the basic premise of the monetarists. It could be many other factors. Now, the Reserve Bank has been tasked, as any other central bank in the world, the Reserve Bank has been tasked to maintain monetary stability, the price stability. But it can do so by controlling money supply. However, in case there are supply side disruptions, non-availability of goods, non-production of goods, or not possible to import goods, what would happen then? Obviously, it impacts the price level, and that's a very big challenge. And therefore, global uncertainties, global headwinds are generally explained as some of the factors that can contribute to inflationary pressures. There can be other factors too. In a country like ours, which is highly dependent on monsoons, about 60% of our agriculture is still dependent on monsoons, and irrigation not to that extent. So what happens in case there is any disruption in the monsoons? Obviously, the food cycle, the production of agriculture commodities gets impacted, and that immediately starts showing on the price level. You would also know there's a major climate that is taking place. In recent periods, vegetable prices are out of sync with the others. Otherwise, we would have been in the band which is prescribed by the government to the Reserve Bank, 2 plus minus 4. But vegetable prices, spices, pulses, their prices fluctuate a lot because of the climate change. Recently, because of the Russia-Ukraine war, there was disruption both in oil and wheat, as well as other food items like corn. Though all those impact inflation. So therefore, the Reserve Bank is fighting the battle, but is sometimes fighting the battle when it's just not the money supply, which they very adequately have been managing over the years. The liquidity management of the Reserve Bank is exemplary. They are on sometimes repo and sometimes reverse repo, which they have been actively doing. But the issue is when there are disruptive supply side or climate change, which is causing disruption in agriculture production, that is the time when price stability becomes a challenge. In any case, one must appreciate, if you look at the trend in the last few years, especially after COVID, and most especially after February 22, when Russia-Ukraine war started, inflation in other countries like the US, Europe, especially UK, it was much higher than what we recorded it in India. To illustrate, the average inflation in those countries is around 2% if you take a 30-year average, but during the last 2 years, it touched 10%. That's 5 times their average. In contrast, in India, the average inflation is around 6%. And we have been successfully, and the credit goes to the Reserve Bank, successfully contain it less than 8%, though we have been a little out of the band of, as I said, 2 plus minus 2, 4 plus minus 2. So it should be around 6 or less than 6, but we little above that. So to that extent, I must mention that the Reserve Bank has played a very crucial role in managing inflation against all odds, and the world recognizes it.
There have been concerns about the effectiveness of monetary policy transmission, with policy rate changes not fully reflecting in lending rates.
Yes, please remember, though we are now the fifth largest economy in the world, and soon will be the third largest economy in the world, thanks to the political stability and the policies that we have seen in the last decade. So we are galloping ahead of growth, and we're always recording higher growth than projected because the overall environment in the country is so conducive to. But do remember that we are an emerging country, and therefore our markets are still not seamlessly connected as in the rest of the world. American system, the British economy, they are very seamless. They have been practicing inflation targeting for longer time than us, of course, but the markets are seamless. The transmission is far faster and easier. In our country, our markets sometimes are disjointed, and that is because we are yet not that developed. Please also remember that the transmission mechanism works through the interest rates, obviously. The repo rate is fixed, and then one expects the repo rate to transmit across all the markets, be it the government securities market, be it the money market at the short end, be it the credit market, or be it even the foreign exchange market. We expect that it should transmit all across. But because there could be bottlenecks in different markets and different markets not communicating with each other, there could be surpluses at some places, there could be less dependence on borrowings. So all these reasons can impact the transmission mechanism. You must have noticed that the governor in his recent speech also mentioned that we are pausing and we are waiting for the transmission of the interest rates to take place across all the segments. So this basically is because of the fragmentation of the markets, and I would say markets not as developed as in the advanced countries like America or the UK. Are we advancing towards that? Of course, we are advancing towards that. The Reserve Bank has instituted various techniques and tools whereby the repo rate gets reflected in your EMIs with a little lag, also gets reflected into your lending rates and deposit rates with a little lag. And that, of course, will take some time to bring it at par with other financial markets, especially the US and the UK.
The issue of NPAs has plagued the Indian banking system for years. Has RBI failed to address this issue more effectively?
The non-performing assets of our country have followed a different trajectory. Now, I have been working on something called the Bharat norms, different from the Basel norms. And what I'm saying is, well, the Basel norms got kicked in at a certain point of time, and from 1974 onwards, and we started adopting them by 1990. All those things are known to monetary policy and regulators and supervisors. But the key thing is, how do we define our non-performing assets? And I must mention it's published at one point of time in India, around 94. We had about 20% of our assets were non-performing assets. It's the good monetary policy, the good regulatory and supervisory practices of the Reserve Bank. We were able to bring it to the world norms of around 2% of non-performing assets. Again, the period changed, the times changed, and our non-performing assets started rising again, and we were able to bring it back. Now, I must share one thing with you. we are firstly not an outlier on non-performing assets. We are doing much better than the rest of the world, especially after the global financial crisis. This should be clear in our minds. They complain that the public sector banks have higher non-performing assets than the non-performing assets in the private sector. That also is a myth. If you look, there was a time when private sector had higher non-performing assets than the public sector. Public sector banks I bring in because they are more closely regulated, and therefore one uses them as a benchmark or as a litmus test. Now, the correction that has taken place in the non-performing assets of the public sector banks is also very exemplary. If you look up the latest publications from the Reserve Bank, we are again amongst the best. I should share one thought with you. There was a time when in our country we had development financial institutions separate from commercial banks. Also, we did not, the development financial institutions, as they merged into universal banking, I feel that the commercial banks did not have the wherewithal or the expertise to now start assessing the commercial viability of the new projects that were being brought in infrastructure in the country. Please remember, in the last 10 years, the way the number of airports have developed, the roadways have developed, seaports have developed, other infrastructure activities that have taken place in the last 10 years is mind-boggling. And therefore, the assessment of these has to be done very carefully. And that is why the government came in and introduced an infrastructure financing institution now. So to that extent, the complaint that was there that it's difficult to assess commercial viability or the lack of expertise and skill to assess the commercial viability has caused these NPAs to rise, that thing has been addressed. As far as the commercial banks are concerned, especially the public sector banks. In my other research, which I have done at IIM Bangalore, it is documented in the working papers. I have clearly shown that the non-performing assets of the public sector banks are in no way to be blamed to lack of competency. It is the type of financing which the public sector banks did, which the private sector banks were shy of. When the private sector banks were doing most of the investment in creamy layers and in creamy locations, it's the public sector banks which were taking maximum risk and large amounts. And therefore, those, when the cycle turned, those were getting impacted, and therefore for some time they were recorded in the public sector balance sheets. But very soon a rectification took place. The public sector banks were of course helped by the government, the owner, bailed out through capital infusion and other things. And now the non-performing assets in public sector banks are in no way inferior or severe than the private sector banks.
There are concerns about the pace of banking sector reforms in India. What reforms should RBI prioritize in the coming years?
I would differ from that statement. I would rather say that the banking sector, especially the Reserve Bank, has been on the forefront of reforms in our country. Of course, the government has done its own reforms in a big bang way, but the Reserve Bank has also led the way in a very significant manner. Please remember the story of computerization. During the story of computerization, you must remember how the computerization in the banking industry, of course, it started from the railways, and railways computerization helped people understand and get familiar with the benefits of computerization. But with the computerization of the banking industry, it became so easy. Core banking got set in, and from small things, from getting your passbook updated to sending money across the world, became so apparent that the acceptability of computerization increased manifold. Otherwise, for a long time in our country, it was considered computerization can be harmful for labor, and labor unions were not willing to accept it. But once they saw the benefits, now, if you look how the Reserve Bank has led this, you must have noticed about the UPI. And UPI has now become a global phenomenon. India's beam, India's digital economy, and that is being led by the Reserve Bank of India, I think has played a very prominent role. The cryptocurrency, which came in and was posing huge risks across the planet, the Reserve Bank is one of those pioneering institutions which is experimenting with the CBDC. So therefore, I would say on the technological frontier, the Reserve Bank has played a very prominent role. Connected to this is a story of the financial inclusion. Now, I was in the Reserve Bank at that point of time when experiments with handheld devices were being done. The State Bank of India was playing a key role in that development, and the Reserve Bank was engaging and encouraging it. So the financial inclusion that you saw through the handheld devices in remote parts of the country, and when we say remote part of the country, India is like a continent. You have mountains and you have forests and you have desert, and still the technology was so robust that we could do core banking from handsets. So therefore, I would say that the Reserve Bank has been done pioneering work in technology and banking. Now, what are the other reforms that can be brought in? Of course, the Reserve Bank is experimenting with the CBDC, and there's a possibility that this will be a grand success, and therefore cryptocurrency would be not a priority. Also, on regulation and supervision, I also should share with you, I was there in the Reserve Bank at that point of time when prudential norms were being evolved and constructed. In fact, insiders in the Reserve Bank will share with you when Basel norms were being prepared, the Reserve Bank was a signatory and a significant contributory in contributing institution in the evolvement of Basel norms. So the reforms that you are watching in the banking industry, the Reserve Bank has played a crucial role in it right from the beginning. Now, in the regulatory and supervisory mechanism, I should share this with you. While many banks collapsed different times at different places, recently you saw the Silicon Valley. But in the country, in our country, despite such complex web of banking institutions, you don't find that because the Reserve Bank swings it through its regulatory and supervisory mechanism. It knows where the fault lines are and very, very quickly able to provide either a band-aid or provide a merger solution and take care of the financial woes of its people. So I would say the reforms that are being ushered in now or being thought through into regulatory and supervisory mechanisms are again path-breaking, and that credit does go to the Reserve Bank of India.
There have been debates about the level of autonomy the RBI enjoys. Can RBI maintain its independence while also being accountable to the government?
This is the most important question that you have asked, not only for India, for other central banks across the world. How much of autonomy should a central bank enjoy? The issue is sovereign is the most important thing. Every institution in the country works under the sovereign. That aspect has to be always respected and has to be recognized. Even in the Fed Reserve, when this question was asked, it was clear that they work under the Congress. They cannot work out of the Congress. In our own country, it's very important to remember that till 1935, the central banking function was part of the government of India. It is only through super specialization, which is the trend, that a central bank got created. Please also remember that in 1900, there were only 12 central banks. Bank of England was the second central bank created in 1694. Of course, the first one was in 1656. Out of Europe, only Japan had one bank. In 1900, only 12 central banks were there. Our own central bank came into existence in 1935. They were part of the government. The activities that the central bank does, currency and coinage, part of the government. It is advisor to the government. It manages the foreign exchange on behalf of the government. So therefore, thinking that any central bank is independent of the government of the country, I think is wrong thinking. I always say it is in a married relationship. None of the two are independent of each other. But if there has to be a sort of order of priority, it's the sovereign which plays the most important role. The independence of a central bank in economic literature has been examined at different points of time in different countries. Please remember, after the global financial crisis of 2008, this thought of autonomy of a central bank or independence of a central bank suddenly took the backseat. Because when it came to now taking care of the financial system, the government had to swing into action and provide all the support that the Federal Reserve needed. And now, I think in our own country, that understanding has emerged that the central bank is subject to the sovereign of the country. And with that understanding, because now there is stability of policies, that understanding is helping a lot. You asked a question in the beginning about the role of the central bank or the Reserve Bank in the growth. The amount of stability and which is reflected in two different aspects, price stability, and nowadays one can call it the financial stability. Financial stability, taking care of the banking system and taking care of the cooperative banks, non-banking finance companies, microfinance institutions, the price stability and the financial stability, those play a very important role in creating a conducive environment under which growth can take place. That is why this overall macro environment which is to be created in the country, where the government operates through the fisc, and its specialized wing operates through the monetary policy of interest rate. Once they are in sync with each other, they understand each other, and they support and supplement each other, they complement each other. At certain points, there is a possibility that the fisc is little aggressive, the monetary policy is little loose, so they are complementing the effort of each other in creating a conducive growth environment. That has evolved in recent years. And that stability is one of the factors why India's growth quarter after quarter exceeds the projections made within our country by numerical formulas and models, also the expectation of experts. Because that ease of doing business or that stability is so beautiful now that environment for growth is very conducive and germane, and that is what is rolling out quarter after quarter. There are checks and balances, obviously. There are litmus tests, obviously. If inflation is not under control, that's one litmus test that the policy is going somewhere wrong. If under the regulatory supervisory mechanism, the banking institutions are collapsing, somewhere it is a litmus test that there is a failure of policy or prudential norms or supervisory function, and that's why the collapse is taking place. So to that extent, checks and balances are always there. One also has a viewpoint of the rest of the world. And one sees across the world under, of course, various arrangements of the IMF and the World Bank, but most importantly, the Bank for International Settlement, where all central banks go together and discuss those issues. So you see the counterparts happening there, and you instantly come to know that something good was happening somewhere else, and I missed the bus. So to that extent, those checks and balances are always there. The most important check and balance that I would like to mention is the staff of the Reserve Bank of India. They are so conscientious and they're so honest to their job. They have the global information at their hand, and then they also know the country and country specific perspective in our own country in different locations in their hand. So the dedication with which the RBI staff works is exemplary. And one of the reasons they work is their training and their compensation and remuneration is amongst the best in the country. The selection of people who join the Reserve Bank is also very tough exam. And once they are in, they're trained with the very best. So to that extent, I would say, at least in the last 90 years, it's been very clear that the staff of the Reserve Bank has stood the test of time. I also should share with you, they have stood the test of time against global standards. One of it is the capital account convertibility. As you know, IMF was very keen to push capital account convertibility for many years in our country. Just to summarize and brief, you know that Tarpur Committee, two reports were done at a space of 10 years apart, and how they resisted the pressure from the international media and international multinational institutions, especially the IMF, that they did not only not go for capital account convertibility, but they convinced the rest of the world that capital account convertibility is not the right strategy for an emerging market. And today, the wisdom, after nearly 20 years of putting pressure on India, is accepting India's line of thought, and capital account convertibility is not a priority as far as the IMF or Washington consensus or global economic policy is. So that is the resilience of the people at the Reserve Bank who stand by their conviction. They see the rest of the world, but then they know what is good for the country. 90 years is a good time to prove that they've stood the test of time. I also should like to share, when you say of checks and balances, there's very important litmus test, which is foreign exchange reserves. If you remember, in 1991, India was in a major crisis because we did not have resources to pay for our imports. At one point of time, we had only import cover of 14 days. We would have only foreign exchange reserves to pay for 14 days of imports. Now, if you look how it has evolved over the years, and that's where I say the Reserve Bank of India has played a very important role. At that point of time, we had to hypothecate our gold with Bank of England, and today we are sitting on record foreign exchange reserves. There was a time when Rangarajan and Reddy came out with a formula saying that we need about 1 year of import cover, and India had 17 months of foreign exchange reserves to cover its import. That is when the rating agencies started looking up to India and said, look, despite against all odds and despite all the challenges, the Reserve Bank has learned its lesson and walking the talk. I should also mention to you, had this Rangarajan Reddy rule implemented and taken by the IMF to the rest of the world, the Asian crisis of 97 would not have happened. Much later, in 1999, the Greenspan-Goodity rule came, and that rule was very similar to the rule which, or I would say, quite close but not the same, to what the Rangarajan Reddy rule was, which was minted in our country in 93-95 under the High Committee on the Balance of Payments, High Power Committee on the Balance of Payments. So therefore, the foreign exchange reserves under the formula devised and minted in our country was so important that it saved after that many countries in the world, because everybody started thinking in terms of keeping foreign exchange reserves adequate so that they can pay for their imports. In some countries, it was 3 months, in some countries, 6 months, but in our country, we have consistently maintained 10 months and above. And that is why the rating agencies are very impressed with the way the Reserve Bank conducts its external sector policy also. You would be also surprised to know the exchange rate of the Indian rupee. It's been reasonably stable. It fluctuates, but it's been reasonably stable over a period of time. That shows that there is an inherent strength in the country, in the economic policies that are being pursued in the country, and part of that credit, of course, goes to the government, and other part goes in implementing it in the Reserve Bank of India.
How can RBI facilitate India's growth as a global economic powerhouse?
RBI will continue to play a very important role. While the Prime Minister of the country has set a tone of high growth, initially it was $5 trillion economy. Now the Prime Minister is talking of 2047, 100 years of India's independence. And we want to have a developed country status by then. How does that happen? The growth has to be above 10%, which I think is feasible, despite all odds of COVID, despite all odds of the supply chain disruptions, India surprised everyone with recording a 8.4% growth. In case the economic policies are persistent and positive and growth environment is there in the country, I don't see it a big challenge for India with its rich demographic dividend, with its rich urge to grow, with rest of the world looking at India for its manpower support and IT support and our UPI. I don't see 10% or above is a challenge. We can easily achieve it. It's not an unachievable. To create that environment, you need the banking system. The banking system will have to provide resources. Not only the banking system, as we know in commercial banking, cooperative banks, and non-banking finance companies, which are now under the ambit of the Reserve Bank and regulation, will also have to provide resources. This effort has to be across the country, and the Reserve Bank's reach is across the country. So if the Reserve Bank is able to provide a support in terms of robust financial institutions, keeping inflation under control, ensuring liquidity management, which it has successfully done in recent time, and ensuring that financial institutions across the spectrum, commercial banks, non-banking, MFIs, are robust, and it has a very good regulatory mechanism, prudential norms, red alert mechanism. If it's able to provide that support, it will be easy for us to achieve that dream which the Prime Minister has set. It is achievable, but it needs each one contributing to it, and Reserve Bank being a significant component of our landscape for growth has a bigger responsibility, which it can certainly. So its 90-year record shows that.